getting something started from scratch is a real challenge. Now you disbursed $100 million. So what's that journey been like?
We started when ILFS had a crisis. Then COVID happened, and now RBI has gone hyperactive. In the context of all the challenges, it's been great that we've done 100 million of disbursement. We've helped over 50,000 borrowers kind of improve their credit history. In rooftop solar, we've been able to now save about 20 crores on an annual basis in electricity bill payments. That's equivalent to planting like nearly 1 million trees. So we still think we're very small in the context of India.
By 2030, where would you like these numbers to be?
What we've done in the last 5-6 years, we would like to do in the next 1 year in terms of disbursement. By 2030, we would like to have helped over 1 million Indians.
Hey guys, we're here with Mr. Aditya Damani, the founder and CEO of Credit Fair, a rising NBFC in India that's disbursed over $100 million. So Aditya, why don't you tell us, how did you become a startup founder? What was your journey into becoming a startup founder?
Thanks, Varun, for having me. Very excited to be here. So I've had a good amount of work experience before I really took the plunge and started my own venture. I studied engineering and economics. I worked in New York for a couple of years at PIMCO, which is one of the largest debt asset management companies. Then I wanted to be in a more entrepreneurial environment, came back to India, joined my family's equity trading business, where I started something new within that, helping private equity funds, helping startups with M&A, and was fascinated by the whole fintech space, by the lending space. Wanted to come on the operational side, wanted to build something. But before that, I wanted more hands-on experience. I only had experience on the investment side, nothing on running a company and about everything else that it entails. So I did an MBA at London Business School. I worked with a few startups in London, and then in 2018 started up with my own venture.
Nice. So how was your experience with London Business School like? What did LBS really teach you that helped you start Credit Fair?
So I guess it taught me that people can party and work hard more than you imagine. But in all the seriousness, I think it got me really well-rounded. So I learned about so many different businesses and learned a lot from my peers who came from global backgrounds, different work backgrounds, whether it be advertising or marketing or, like a factory or industrial business, something which I was not exposed to at all. So the diversity and how all that knowledge and network can be kind of meshed together is something I got from LBS.
Really interesting. So why credit in particular? Why was credit your field of choice?
So like I said, I was very keen to do something in fintech, but being a true blood Marwadi, like I wanted to make sure I choose a segment where you can make money. And looking at payments, looking at a lot of other fintech segments, I really could not figure out where I can make money. So credit felt something which which is something also which I understood well, which is where I got good work experience after London. So it was easier for me to start up as well.
Okay, so that's really interesting. So can you tell us a little bit about, let's start by introducing what a credit system is to our viewers. Right. Because I think you and I may have a sense of what a credit system is, but I want to try and put some figures, some context for our viewers so they understand what we mean when we talk about the credit system of the country.
Okay, so credit system, ultimately borrowing and lending has been going on since time immemorial. I guess when we refer to credit, we're talking about the formalized borrowing and lending, right? And that is what really drives the country forward, especially a young country like India. So we have a lot of young people who have a very bright future ahead of them, but they don't have enough cash today. So credit is about taking money from, in a way, borrowing from your future.
Right. And there's a number of different use cases, but I think I'll outline some of the larger ones and you can talk about the ones that you guys work on. I think housing loans, gold loans, vehicle loans, education loans, credit card loans are, from my understanding, the 5 largest segments of lending in India. But there's also smaller segments that people play in, microcredit as well. And I think we've covered this extensively actually across a couple of podcasts. But what are the use cases that Credit Fair specifically finances?
Yeah, so I think you covered the customer-facing segments really well, but there's of course the business side, and small business and large businesses as well. So Credit Fair is focused on it's more use case-based financing. We are looking to serve both small businesses as well as consumers. And currently, our main focus is on green financing, helping borrowers as well as the environment. So rooftop solar, the one where the Prime Minister is talking about 1 crore homes to be electrified, that's the segment we're really focusing on. Apart from that, we do education loans, but not your traditional like undergrad or masters. These are upskilling loans for people who are already working. So those are the two big segments for us.
Interesting. Yeah. So just in terms of, I guess, size of the total pie, because that's always a really great way to understand the ecosystem. I have some figures, and maybe you can, give me a sense check of whether I'm right or wrong.
Yes.
So the total deposits in India across the banks is something around $2.1 trillion. And that's grown at about an 8% CAGR over the last 8 years, which makes sense with incomes growing at roughly that same pace. And bank credit has, over the last several years, grown to $2.3 trillion in FY23, with sharply growing in the last couple of years because of pandemic and lower norms and just generally ease of financing. But is it fair to say that the credit system of India as a country is about $2.5 trillion thereabouts?
Yeah, sounds about right. So typically, credit is actually a multiple of GDP. But in India, it's actually smaller than a GDP. So I don't recall the exact numbers, but I think it sounds about right.
Yeah.
And the growth rate in credits might have been, around that 8-10% overall. But especially for the segments we are going after, which is retail lending, it's been more towards 15-20%.
Right.
So there's been a big shift where the large companies have been deleveraging and the mass of India has been taking
and that's a trend that's been on since about 2018, right?
Yes.
Where large companies have been sort of deleveraging. So can you talk to us about, how this credit system has sort of evolved as well? Because what are the use cases that's driving this consumer demand? And going forward as well, how is this credit system going to evolve?
Yeah, so if you talk about dollars, these sound like big numbers. But when you put in the context of an individual, the penetration is abysmal. We have only 4% of Indians have a credit card.
Right.
Whereas like abroad, it would be like everyone has a credit card. In fact, everyone has 3 credit cards on average.
Right.
Secondly, about 25 crore Indians have a credit history formally. So for 100 crore adults, we still have only 25% penetration. So the growth we've been seeing, it sounds very rapid, but it's in the context of a very small base.
Right. And so just to sort of take this one step forward. So we have 250 million Indians, 250 million Indians that have a credit history, 40 million or so that are active, high quality borrowers. Over the last 4-5 years, has the credit system growth been all continuous new borrowing by the same number of borrowers? And how much of this is new borrowers making their first...
So that's a great question. So I think in the... let's say from 2018 to 2022, maybe 20-30% of all borrowing was from new to credit, as we call it. So people who've not taken a formal loan before. Last year or two, it's moderated. Now it's about maybe 15-20% are people who don't have a credit history.
Okay, interesting. Yeah. So it seems like the growth has slowed off. So now over the next 5 years, what do you expect the growth of the Indian credit system to look like? Because we've had this huge deleveraging by corporates. Now, do you expect project finance and corporate finance to pick up, or do you think it'll continue to stay consumer focused?
I think both will grow. Just the rate of growth was moderated, and I feel it has moderated more because of the regulator. The RBI is not very comfortable with the growth in unsecured loans, with retail borrowings. So I think maybe 15-20% growth should be maintained over the next 3 to 5 years in the retail lending side. Project finance and other infrastructure projects should also grow, but maybe the growth will be a little slower there.
Fair enough. So let's come to Credit Fair specifically, right? Because that's what we're here to talk about.
Sure.
That's what you've been building. That's your champion. So tell us a little bit about we understand that you guys have two core use cases like rooftop solar and loans for upskilling. Could you give us a sense of what these last 6 years have been like? Because getting something started from scratch is a real challenge. Now you've disbursed $100 million. So what's that journey been like?
Yeah, it's been great. Like, I think I've entered at challenging times and seen a lot of volatility, seen a lot of challenges. But the best part is I'm always excited whenever I wake up, and we've been able to grow despite everything that might have happened in the startup ecosystem. We started when ILFS had a crisis. Then COVID happened, and now RBI has gotten hyperactive. So I think in the context of all the challenges, it's been great that we've done 100 million of disbursement. We've helped over 50,000 borrowers kind of improve their credit history. We've in rooftop solar, we've been able to now save about 20 crores on an annual basis in electricity bill payments for our of the customers. Then that's equivalent to planting like nearly 1 million trees.
Wow.
So yeah, I think that and 1 million annually. So yeah, I think it's been a great journey. A team is over 125 people now. Very excited, and we still think we're very small in the context of India. 50,000 customers is nothing. I'm hoping that we can at least impact 1 million Indians positively.
Yeah. No, I would love to see that happen. I think that'd be a really, really powerful goal for what you can do for the country as well as Credit Fair. So I want to understand more about the business and how it runs. So primarily to offer credit, you have to have the money to offer credit. So either you borrow money and lend forward, or you lend money and then you sell that loan back.
Yes.
Or you have that money on your books and then you lend money from what you have on your books. So what's Credit Fair's approach to raising capital to deploy?
Right, that's a great question. And actually, the supply of money is it's a big challenge to be solved still for improving the accessibility of credit downwards. So we took the approach of being regulated from day zero, which I think again was a contrarian approach to most startups, but then it has helped us now in the last couple of years with the whole environment changing. So we got our own NBFC license in 2018. And just a few months ago, we also got a peer-to-peer lending NBFC license. So our idea is that we need to have control on our capital sources. So we have a balance sheet, and now we have a platform also where we can curate the best borrowers with the best lenders and match them. And we're trying to be an asset-light model where we can syndicate money from all the sources, whether it's banks, NBFCs, or retail investors, and provide it to the average Indian.
Okay, interesting. So right now let's say you've had 50,000 people, you've disbursed 100 million worth of loans. By the end of this financial year, so we're sitting at the end of FY24. By FY25, where do you want those numbers to be? And by 2030, where would you like these numbers to be?
Yeah, that's a great question. So we are looking to so we would have done 100 million up till now, but the goal is that in the next year, do another 100 million of disbursement. Right. So what we've done in the last 5-6 years, we would like to do in the next 1 year in terms of disbursement. Our loans are typically short tenure. So what that means is that we also get repayments very fast. So in terms of AUM, we're looking at assets under management. We are looking at about $80-90 million target for the next March FY25. And by 2030, we would like to have helped over 1 million Indians. So in the context of numbers, that would be like going from a $80-90 million AUM towards 1 billion plus AUM. And I think, but the more important numbers are, again, like how many people are we helping? So we've done about 4,000 rooftop solar installations, which have been facilitated because of our finance. We're looking to grow that by 100x to about 5 lakh installations by 2030.
Wow, that's a really, really ambitious but achievable target. I can see that happening.
Yeah, I mean, the government has set a target of 1 crore, so it's still
not... 5 lakh is nothing. 5 lakh is a drop in the bucket.
Yeah, exactly. So we try to do that sooner, actually. Hopefully, the next 3-4 years. But yeah.
So out of the two, loans for upskilling in rooftop solar energy, which one is, I guess, a larger part of your book? I would imagine rooftop solar.
Not yet, because it's picked up in the last 1-2 years. So as of now, 45% of our book is education, upskilling. But rooftop solar was 4% a year ago. It's become 25% now.
Okay. So, and you expect this growth to be driven by rooftop solar?
Yes, that's right.
Okay. So what does a typical rooftop solar sort of loan look like? I mean, from the borrower side as well as from your side, what's happening there?
Yeah. If you think about the purchase journey, this is not someone like we're sitting in Mumbai right now, so we can't visualize it. But if you go to like a small town, like, somewhere like near Nagpur or on the outskirts of, let's say Lonavala or something, where you have standalone houses and people who are spending anywhere from 2,000 to 10,000 rupees in monthly electricity bills. So they'll put up like 10 solar plates on their roof, anywhere like 2 to 10 plates, and then that starts generating electricity. That electricity gets into the grid, and that helps you reduce your electricity bill.
So what's the typical project cost here?
Yeah, the project cost would be anything from like 1 lakh to 5 lakh for a residential customer. We finance small businesses as well. So for them, it could be anything from 10 lakh to 50 lakhs that we do.
And does the customer manage the suppliers, the implementation, everything? Or do you have tie-ups with suppliers or implementers? How does that work?
Yes, it's a B2B2C business model. We partner with the supplier and they already have a lot of leads. They have a lot of customers. But without finance, they're not able to really move the transaction forward.
Right.
So they give us the lead of the customer that, hey, this is, Varun Mehta, he would like a loan to kind of buy the solar asset. And we pay the installer and we collect from the borrower.
Got it. Yeah. And that's typically a 1 year, 2 year loan or something?
It could be anything from 6 months up to 5 years.
Okay.
We see 3 to 5 years as the right tenure for rooftop solar, because then your monthly electricity bill is the same as your monthly installment.
Yeah, that makes sense.
So you're like not really shelling out anything as an end customer. You're like just saving your electricity bill, and then you have a free asset for 25 years.
Okay, interesting. So are you guys planning on adding more use cases like rooftop solar, or do you think this alone will drive you to that $1 billion target?
We think this can drive us at least to $500 million. So I think until we get there, we'd like to focus here. And maybe after that, we do more of these green and climate-driven use cases. So it could be electric vehicles, it could be water, it could be something else like after 2-3 years that we can look at.
Interesting. So you've been on this journey now for about 6 years.
Yeah.
And you've got, obviously some journey ahead of you. Do you have any thoughts or words of advice or anything you've really learned through this journey that you'd like to share with young entrepreneurs like myself and many of our viewers that are watching?
So I think it's been finding your ikigai is like the most important thing. So I would say just don't jump in, just because you see like on your story or whatever that, this guy is doing that guy is doing that, or like to kind of escape a traditional corporate job. I don't think that should be the motivation. Really make sure that you're motivated for the right reasons, because this is a 8-10 year journey. It's not something that within 2-3 years you can figure it out and kind of raise a lot of money and then exit. So I think just having that sense is really important. And secondly, like very few companies are actually winner takes all dynamics. And I think in a country like India, actually, we need more of collaboration, less of competition.
Yeah.
A lot of people need to kind of focus. There's enough business models which might not scale like to $1 billion in 3 years, but they might scale to $1 billion in 8 years or 7 years. So I think a lot more entrepreneurs should look at those segments, because that's a higher probability of success.
Yeah.
At the same time of life-changing outcome.
Fantastic. That's really, really interesting to know. Out of curiosity, what is, from the investor side of things, what is the future of Credit Fair? Are you guys looking to raise funding, list in the public markets, anything like that? As at a corporate level, what are your plans?
So we're still very small. Like, we might have disbursed $100 million, but our AUM right now is 30 million. And I think to be like a well-regarded listed company, we need to be like 10 to 20 times bigger.
Yeah.
So I think listing is hopefully in the next 3 to 5 years. But our raw material is money, so we're always raising money. Our focus is to grow more asset light right now, and then maybe dilute our equity in the later part of the year.
Interesting. So, I guess two questions, because you say you're creating a marketplace model
Right.
where cheap money can find high quality
Right.
borrowers.
Right.
So, what kind of cheap money? Who would typically be the people that you're reaching out to? And is there anything in particular you'd like to share with them? Because
Right.
they're obviously going to be first to your
Sure.
platform, right?
No, that's thanks for that question. So we have a B2C, B2B, B2B2C model for the retail savers as well. We're targeting people, who might have anything from like a few lakhs to few crores of investable surplus. And there are like there's been crores of demat accounts opened, right? And everyone has made a lot of money in the equity markets. But there's always important to diversify some amount of that money outside.
Right.
And we think alternative fixed income is a great place. That's why I'm very passionate about it. Although my family's been in the stock markets for over 30 years. So yeah, I think anything from like 10,000 up to 50 lakhs or something is what people can allocate to peer-to-peer lending. And they can do that through our platform.
And what kind of yields can they expect from this venture?
Yeah, so they can expect double-digit returns here as well. So anything from like 10 to 13% is what can be expected on a consistent basis.
Okay. And any material credit risks for people investing through this platform to really be concerned about?
Yeah, so ultimately, your lending and lending can have NPAs. The question is, how does how does the platform help you mitigate that?
Right.
So that's what we're focused on. Like, we've been lending for ourselves for over 5-6 years. We've seen a lot of cycles. We try to make sure that the money is diversified across 100 plus borrowers. So it's not like everyone will default at the same time. Even if you have 2-3 people defaulting, that gets absorbed in your returns, and you can still get about 12-13% net. So secondly, like going after the quality borrowers. So we get access to that through this whole B2B2C model. Mm-hmm. We offer no cost EMIs, for example. Mm-hmm. So people are taking it out of convenience. They're not always taking money out of desperation.
Right.
Right. And then third, like this thorough underwriting, credit collection checks. So making sure you as a retail investor just ask the right questions. I don't think you should be looking to do like executing all these things. But if you ask the right questions, if you really understand the basics, then yeah, it's a great place.
And hopefully our viewers have understood enough of the basics from you
Sure.
to come and check Credit Fair out on their own.
Right.
But I guess that's all the questions I have for you today, Aditya. Thank you so much for joining us.
Yeah, thanks so much, Varun, for having me.
Pleasure for having you here.
Yeah, likewise. And good luck. It's a great show.
So I have one question regarding your credit system. So you say you give out business loans as well, and your major product is rooftop solar panel project.
Right.
So government is also offering, like in the PMEGP and CMEGP scheme, they offer loans up to 50 lakhs. So why would anyone prefer you over these government schemes? Because they might have lower interest rates on the loans. So what's your USP on that?
Yeah, so the government has a lot of good initiatives, but India is just so big that they're not able to cover everyone. For example, we give loans to schools, hospitals, even we started financing housing societies. So these are different categories of borrowers which are not usually covered by the traditional lenders. A lot of the government schemes are administered by banks or SIDBI, for example. So SIDBI will only lend to a MSME customer, and usually they prefer to lend higher ticket loans. So if I'm a bank manager at a traditional branch, I want to focus on 1 crore and higher ticket size. I'll do 2-3 cases and I hit my target for the month. Whereas we are okay to do anything from 1 lakh up to 50 lakh. So below 50 lakh, there's not much focus of any traditional lender, and they take like 2 to 3 months to give a decision.
Okay.
we'll give a decision within few hours to maybe 2 days.
Okay.
So that's another big reason why people would go with us as compared to a
So,
traditional
like,
lender.
yeah, quick credit
Yeah,
disbursed.
quick, convenient,
Yeah.
and cost effective. Won't be as cheap, but
Little
competitive.
bit like 2-3% here.
Yeah,
or there.
exactly.
I have one more question on the rooftop solar panel thing.
Yes.
So you spoke about the sustainability and
Right.
like that universe. So
Yes.
there's one thing in sustainability universe that is carbon credit points, which is coming
Right.
up and it's been like talked in like US and UK.
Yes.
I don't know exactly what it is, but have you like thought about that because you are giving out loans to initiate that sustainability.
Right.
So like, what are your thoughts on that?
So that is a very interesting topic and a much bigger issue that can be solved that cannot be solved by us individually. So typically carbon credits requires a market to exist where there's buyers and sellers of those credit. In India, the rules are not very clear. I don't think there's any mandatory requirement for a lot of companies to buy these carbon credits. So until that gets clarified, the market won't really pick up. Secondly, for us, we are helping the discoms buy electricity because basically, if I finance a residential customer, the electricity is being sold to like Tata's or Adani or the NSEDC, etc. So we are not clear if we should accrue that carbon credit, the customer or NSEDC. So I mean, there are a lot of nuances still to be figured out, and hopefully the government can give clarity and help us enable that market as well.
But most probably it will take over a decade or something.
No, you never know. It can happen in 2 years, 5 years.
The thing with carbon credits is that it's all about the verifications, and it's not why you're issuing that credit. So for a long time, globally, credits were recognized for replacement. So if you're stopping a coal power plant and replacing it with solar, you used to get a carbon credit. Now that system doesn't exist any longer because the baseline has shifted. Now it's not a case of if you're avoiding emissions or willing to give you credits. It's a case of if you're actually pulling carbon out of the air and putting it somewhere safe, only then we'll issue credits. And even for that, there's no real authority checking that. There's no system to validate that it's happening. And there's no real supply of people doing it. Like if, for example, somebody like Google wanted to go out and they wanted to completely decarbonize. Right? And every year they wanted to fully offset their carbon emissions by buying quality carbon credits. There's no supply. Because nobody's doing it. Because there's no real way to do this thing. Right? So that's why, there's a circular problem here. There's no way to do it. Nobody's looking into it. There's no regulation around it. There's no business model around it. There's too many things wrong there.
Yeah, but you have the net zero goals of 2030, 2070. So you never know. It might happen faster than we expect. It just requires some political will.
Yeah.
Let's see. Company who figures it out might be next Fortune 500.
Yeah. If you can get carbon credits right. It's like oil in reverse. Like all the company, all the money all the oil companies made by pulling oil out. If you're able to push carbon back, you'll make that same money back.
Yeah.
Again?
Yeah, obviously, because it'll be the same price now.
Wow. That is
absolutely.
Okay, those are the only questions I have.
Okay.